What's going on, everyone? Here is why I think the 20 period moving average, the 20 simple moving average, is very, very important. It definitely is important to me because I have a strategy where I am looking to scalp the start of a potential change in trend with this strategy that I teach in Evolution Traders in the Discord in the community. But I want to show you guys a little something here on this 5-minute time frame chart. So what you're looking at here is a 20 period moving average. Okay, I'm not even going to go over the particular strategy where I'm catching the start of the move. Let's just go over how the 20 SMA is very important and how you can actually find additional setups off of the 20 SMA. So once you have a candle that starts to close and build over this 20 period moving average, you can see some consolidation here. You see a little bit of a pullback, right? Nice red candle here at 10 a.m. on Friday that pulls back into the zone of the 20 period moving average. Now remember, moving averages are like rubber bands. They're not brick walls. They are meant to move. They're meant to bend around. It's a little bit of a lagging indicator, which is good. A lot of people think that a lagging indicator is not good. You want it to lag a little bit because you want it to catch up with price in real time as those candlesticks are printing. Because if you had a moving average that was just simply going with the price of the current price of the stock, it would just be a 1 period moving average, and it would just, you would have no actual trend, right? So again, a lagging indicator is good because it's going to allow you to take previous data and kind of formulate an opinion and a theory where you can potentially make some cash. So once we pull into this zone of this 20 period moving average, and then we kind of push higher, what I'm looking for is a break over that 20 period moving average. I'm looking for the pullback into the 20 period moving average, and once we start to get back up and take out that previous red candle, or take out that pullback or consolidation candles or candle, depending on how many of them there was, I'm looking to take a long position and get back into the existing trend, right? Because think about it, the 20 period moving average, you can associate it, it's like the VWAP, right? The volume weighted average price. I know a lot of people are familiar with VWAP. That's just giving you an average price of where there's a lot of potential buyers and sellers and where we are holding. So if we're trading over the 20 period moving average, we want to continue to stay with that trend. We don't want to short against the trend, right? Until the trend has changed. So as we pull into this 20 period moving average and you see us start to bounce and we take out that consolidation or that pullback, you want to then get long. Now you can get long after this high wick gets confirmed, and they would be getting long here at 10:10. Set yourself a fixed stop loss, get into that, or you can use a previous 5-minute stop, previous 5-minute low as your stop, depending on how much you want to risk. Notice the second trade setup. Again, 1, 2, 3, 4 candles pull all the way back into this 20 period moving average. Notice how we bounce off the 20 period moving average again, sets up a nice little hammer candle. You can take this setup here at 10:55 when we clear out these 2 consolidation candles off that bounce of the 20 period moving average and take this for a little bit of a ride. Again, if you would have just taken the breakout over these pullback candles, over these consolidation candles, that price was sitting at 20,207, and in a matter of 5 minutes shoots all the way up to 20,236. I mean, there was over 20 points here worth of room on this potential trade to take. Now notice the pullback here again. Here's another 1, 2 candle pullbacks, and then here's the explosion again. Now you have some consolidation, you have this pullback here, little hammer candle, following candle kind of pushes up towards the highs, and you can take some money there. I'm a big believer in a fixed take profit and a fixed stop loss. I like to designate 5 points or 10 points of that fixed take profit, about 15 or 20 points of a designated fixed stop loss. That kind of helps me just capture these scalps, right? Now you can see here towards going into lunch here, we start to lose the 20 period moving average where we actually close below it. That could be signifying that there's a potential short-term change in trend to the downside. And you can see here we actually chopped around for a while and put in some lows, put in some lows, put in some lows. Now, again, as long as you're trading over that 20 period moving average, you're looking for those bounce opportunities, those bounce opportunities, those bounce opportunities. And then once we get below the 20 period moving average, you're looking for those potential short opportunities. I hope this video makes a lot of sense. If you guys would like to join the free side of the Discord where I kind of give, some daily tips and notes, so you guys can kind of get familiar with how I work and navigate, definitely hop in there. If you guys are a little bit more serious and you guys want to jump into the actual, big community, the gold member side of the section where we're doing live trading and doing all that one-on-one coaching, and you get access to all the courses, you can definitely take advantage of that as well. I'll see all of you guys on the inside who do decide to come in. Again, hope you enjoy your weekend. I'll see all of you guys on Monday.